Now, you see what my price was actually doing went down, and now it has broke market structure. What do? We actually wait for return to order block. Now, let me share something with you, and this is what I want to share with you.
If I tell you that after watching this video, you are not going to miss any entry again, will you be excited? Sure. In this video, guys, I'll be sharing with you a new secret about an order block and about the breakers. So make sure you pay close attention and sit tight. Watch this video to the end because I'll be sharing with you a top secret that most people don't know about order blocks, what most people don't know about breakers. So after watching this video, like I said, you are going to know exactly how to attack the market at the right time and when not to enter and when to enter trade and when to know if a breaker is going to hold or an order block is going to hold. So make sure you pay close attention to everything, to every details which I'll be sharing with you right here in this video. So what's up, guys? My name is Godwin Edafe. In this video, I'll be sharing with you a new secret on order blocks and breakers. So make sure you pay close attention to watch this video to the very end so you learn exactly how to do this step by step, right? So you can support the channel by leaving me with a like. And if you are new to me, make sure you smash the subscribe button because you don't want to miss out on all these forex secrets that are being reviewed right here on this channel. So make sure that you sit tight and pay close attention. Watch this video because a lot of videos, a lot of secrets and nuggets are inside the video. See you there.
For instance, you might see something like this. You might see something like this. Something like this. Something like this. Something like this. Now, this was the previous high. This was the previous high, and it has to be taken out. It was taken out by that candle. Price went above it. Went above it again. And basically, what we should do is we wait for return to order block. Wait for return to this order block, right? So I'm going to share something with you real quick. And what's it going to be? And this is it. So for instance, you see that price came here, and price broke through. And what we're actually waiting for now is we are waiting for return to this order block right there. We're waiting for the return to order block right there. Right? So basically, we wait that price, we expect that price should, as price has rallied up, price should come down and touch our order block and push to the upside. That's what we expect, right? But what I want to share with you is this. Let's assume that we have another candle here. Let's assume that we have another candle there. Let's call that green candle. And let's say all of these candles are all red candles. And we have another green candle here. Let's say we have another green candle at this level. And we see that price came down and created a swing and now going up. Wait for price to come back to this particular order block. Now, what I want to show you is this. If you notice, what do you notice? Are you still with me?
Yes, sir.
Okay. So, what do you guys notice? Like, I mean, you can see that this is green, this is red. I'm going to assume that that's red as well. And price came, and we see this one, and this one. Price is now going back up, broke market structure. Now we wait for a RTO. Now, in most cases, price is actually going to reverse at this point. At this point. And why should price reverse? Now, one of the reasons why price should reverse here is that you can see these consecutive candles, 1, 2, 3, right? They are all red candles, 1, 2, 3. So price might not want to come to this other block, but rather reverse at this particular one, which is this breaker here, right? So anytime you see something like this, try as much as you can to be aggressive. Why? Because price might not get to this other block immediately, but might want to reverse at this point, right? So I'm going to show you live example. Okay, so I'm going to use this one for example, this little stuff that you are seeing right there. Let's zoom in so we can understand this better. Okay. All right, so we can see that price was creating low, high, low, high, low, high, low, high, 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 low, higher high, higher low, and finally it broke through. You can see that. So we can easily say that this was a minor break. Yeah, probably here is a minor break, and this is another one, and this was a major break. Now that was a major break in market structure. So what we do basically is this. Now you see what my price was actually doing, went down, and now it has broke market structure. What do? We actually wait for return to other block. Now let me share something with you, and this is what I want to share with you. So I'm going to clean up this now so you can see clearly, right? So you see 1, 2 candles, 1, 2, but when you see something like 1, 2, 3 is actually better, like this, something like this, 1, 2, 3, and probably this fourth, 1, 2, 3. Let's assume that price broke through. That would have been a better example. But saying that 1, 2, 3, cool, right? 1, 2, 3, and we see that this is, take note, this was the major break, minor break, significant break, 1, 2, 3, and let's extend that. Let's take it down to the body of the candle. That's it. So basically what we should do is we are supposed to wait for a return to other block right here. We're supposed to wait for return to other block at this level. That's at this level. We're supposed to wait for return to other block. And what happens? Price came and it never touched it. Right? I'm not saying you should chase price, but I actually want to. But look at the move that we would have missed. You see that? So we would have been expecting price to come to this level, and price never came. Right? So let me explain to you why that actually occurred. You can see 1, 2, 3, red, all are red candles consecutively. 1, 2, 3, right? 1, 2, and price broke it. Price broke it. So probably we could say that this is our other block right there, because this was the last candle that was responsible for the break in structure. But that's not what I want to share with you today. I want you to look at something differently. Let's assume that you have forgotten this area. Let's say this was the only one that was existing. Let's say there was no red candle here, all were green. You can gladly enter the trade at the beginning of this candle, 1, 2. Why? Because these are consecutive candles. So this is a simple return to breaker, right? From here, return to breaker. So that's it. And let me show you more example. Good, nice, and good. This is another example. You see, equal loss taken out, significant high, that's major break in market structure, right? And look at that. One is here as well, right? That's one. And this is another one. This is another one. I'm coming. One and another break, major break, a significant break, and this was the major break. Okay, so if you look at this, this was the last candle responsible for the push up of price. And what do you see? Let me zoom in so you can see better. What do you see? You can see 3 consecutive candles. I'm going to count them for you. 1, 2, and 3. Right? 1, 2, 3. So these candles are actually called 3 soldiers. I think something like that. 3 soldiers. 1, 2, 3. Look at that. And take note that this was the candle that was responsible for the push up. Normally, we should wait for return to order block. But anytime you see something like this, you don't have to bother to wait for a return to order block, because most of the time, 80% price will not go back to this order block, but rather it's going to reverse at the breaker. It's going to reverse there. So that's one of the way you can actually identify. Now, if you take note, price rallied up. This was the candle that broke market structure. You see that? And price went up a little and came back, and it respected this other block, right? And if, let's assume that we remove this as well. Let's assume that this was not existing, these red candles. Let's assume that they were not existing. If you look vividly, you can see that this is the actual breaker. And what happened after this green candle rallied up, it came back down and it respected this breaker right there. And boom, price pushed to the upside. So that's it. I hope you are getting me. In case you are getting me, please signify now.
Yeah, we are getting you, sir.
All right. Okay. So those are some of the ways you can actually identify a major break. That's once a major break has happened. Now look at this one. Look at this one. Look at this one. This. I know it's not huge, but I just want to use it for the tutorial. Normally, we should wait for a return to order block here, right? Which actually happened here. But if our stop loss were to be immediately below this candle would have been stopped out before this major push up, right? So this was a major spike. Now, I want you to take your eyes off of this area. Don't look at this area, forget that area, and look at what I want to share with you. Now, we actually expect that price will return to this order block right here, but price never came to it except for this level. But there's something I want to share with you. That's why I'm seeing it. Okay, so basically, you will see this. You can see. Now, this was the break, right? That was the breaker. This was the candle that actually broke market structure. And what do you see now? You see that price rallied up and came back, it returned at the breaker. And why did price return at this breaker? You can believe me, guys, it has been tested. It's going to 80% price might likely return here, because You see this candle, 1, 2, 3, 4. 1, 2, 3, 4, all red candles. So this is actually a perfect example. And look at what price did. It came down to the breaker and it went back up. Let me show you another example. Now, this was liquidity, a little liquidity right there. And price came and broke, took everybody out. And what happened? There was a break in market structure. Now that there's a break in market structure, so what happens next? All you have to do next is this. Now, take note, this was, there was a move, a rally to the downside, like this, a rally to the downside. And we are going to assume that this, look at this, right? There was a little swing there. So that's a break actually, but that's a minor breaker, right? So your eyes could be in that spot, and using the order block metrics, you could use this as our order block. Let's say this is our order block. So we will wait for price to get to this order block. But based on the principle I'm showing you right now, you don't have to wait for it. Why? Because look at these candles, 1, 2, 3, 4, 5, all red candles. The red, look at these red candles. They are all red candles. And what you can do is this. Boom. Yeah. You see that? Very, very sharp. You see how price came and returned there. Now, the only downside I see about this breaker strategy is that your stop loss will actually be somehow huge. Now, let's say we enter the trade right there. Your stop loss will really be huge. This would have been your stop loss, and your take profit should be where's the previous high? It should be in the previous high. But if you are doing this on the higher time frame, is going to be better, right? Okay, so this is 1 to 2 risk to reward ratio. It's not actually bad, right? It's not actually bad. 1 to 2 risk to reward ratio is not bad. 69 pips, meaning you are risking 30 pips to get 69 pips, right? So that's 1 to 2 risk to reward ratio. You see how simple this strategy is. So that's what I actually decided to share with you today. So you have any question, feel free to ask me your questions now. No question?
No, sir.
Okay, you understand it?
I see it's very powerful, sir.
Okay.
Please, I want to ask a question.
Go ahead.
The breaker and the order block, which one is more effective?
Is the order block is more effective. The order block is more effective. Now, one of the reasons that the order block is more effective is this. Now, your stop loss will be small in the order block. Why in the breaker, in some cases, like this case, is going to be big. You see that? Now, if we were to wait for price to come back to, normally what we should do, we should have waited for price to actually come back to this order block, especially when we see something like this. But you see, price never came back to it, right?
Yes, sir.
Price never came back to it. So basically, this would have been our normal order block entry point, which will actually give you a higher risk to reward ratio, which will actually give you a higher risk to reward ratio, which is, just imagine you are risking eight pips to get about how many pips? 70 pips. So if we take it back to exactly this area to get 95 pips, 8 pips to get 95 pips, that's how many? That's about 1 to 11 risk to reward ratio. You can see the difference. So this is the order block. This is the actual order block. Why this is the return to breaker? You can see that the return to breaker, our stop loss will actually be big, will be huge, right? compared to the other block. So as you like your question, the return to other block is the other block is actually better when it comes to, unless you've seen something like this, cases like this. And the good thing about the return to breaker is that you don't have to miss any trade. Now let's assume that we actually want to trade off of this other block, we have actually missed this big move. Okay, would have missed this big move. Now seeing that price is actually return is coming down, look at this. Let me share something with you. Okay, I think that already happened. That already occurred. You can see the power of this. I'm going to delete this. I'm going to delete this. Now, there was a break in, look at this, a high, a low, the price return at this breaker there. There's a high, and price now came back to the breaker. Why? 1, 2 candles. This was really small. 1, 2, 3. The red candles were much. You can see that were much. And what price did? Price went up and came down, and it respected this. You see that? So price did not get to our other block right here. So you would have missed another entry there, but there's no worry if you miss entries. Okay, so this is what I just want to share with you. I believe is actually going to help you in your trading. Okay, we have more questions.
I have a question.
Go ahead.
Okay, my number one question is this. When you started earlier, you mentioned the minor breaking structure
Yeah.
and major breaking structure.
Yes.
So how do we tell that a minor has been broken or a major one has been broken?
Okay.
How do we tell?
All right. So this is a 5 minutes time frame that I'm using for this tutorial. I didn't actually check it at first, right? But it doesn't matter because price is fractal. Now, when you go to 15 minutes, the price movement is actually different, right? And at times in 15 minutes, nothing would have. Now look at this. Can you see this? In the 15 minutes, it's actually clearer. 1, 2, 3, 4, 5, 6. So normally what we would have been doing, we wait for price to return to our other block, right? We wait for price to return to our other block right there. But because we have seen this, we can gladly enter our breaker. So in case we are wrong, we can leave our stop loss below this low in case we are wrong. But the only thing is that we are going to experience a little bit of a drawdown, right? Unless you want to leave your stop loss at this level, which may not be reasonable. Okay, so now let me show you. Look at this. How do you identify the minor and the major break in structure? Now price was doing something at this level, so I'm going to rule this area. Let's see if we see something in the 5 minute time frame. Now in the 5 minute time frame, you can actually see something. You see, this is the major break, and price came, there was a little swing right there, so we can actually say this is a minor break in structure. All right, so let me show you a clearer example. Let me show you a clearer example. Okay, so going to the downside, you see that price formed a low, though it did not take out this low. It formed a high. The high did not take out that high, right? And price came and it took that out, so we can say this is a minor break. For instance, this little low right there is a minor break, but I think that's too small. Okay, that's too small. And this is a significant break, and this is a major break based on this time frame. Okay, based on this time frame, this is a major break. And you see, boom, and price came. What happened? Price reversed at this breaker. Why? One of the reasons is same principle, same thing that I just explained to you. 1, 2 green candles, 3 green candles. You see that? So that's That's very, very simple. So I hope you understand what I mean by minor break and major break in structure. Do you get it now?
Yes, sir. Yes,
Yeah.
sir.
So in the higher time frame, you do the same thing. Now, the only thing is that in the higher time frame, the case might be different. Now look at this. A minor break, that's a minor break by this candle. Significant break. You see that? This candle took out this one. Then we can say this is a major break based on the 5 minutes time frame that we are seeing here now. Right? Boom. See that? So price came, what we expect? We expect that price should react to this other block right here. That's this one. Either this one or this one. But seeing that this one is very small, this one is very small. Now, seeing that there are two, you can actually go for, use the first one as your entry, then your stop loss should be below the two. Right? So, like me, what I will do, I will use this green one as my order block, full order block, because those two candles are really small. So probably to be more secure, I can even take this. And to be even more secure, this is, but the stop loss will be actually very big, right? So you might want to work with that one. And what happened? Look at it. Boom. See what price happened. What happened? What price did? It came here. It respected this one. Even though it tried to wick through it, it only wick through it. The body did not close below this candle right there, and it went up. And it did not take out this high, meaning we are still in a downtrend. And what happened? It took out this one, it took out this low, and it respected this one. And this high was taken out. That's it. This high was taken out, meaning we are now back to the up trend in the take note, just in the 5 minutes to wait, we expect, wait for return to order block, right? Like this. So that's it, guys. That's it. Any more question?